Good evening. Welcome to Money Matters, which has now moved from Sunday evenings to Wednesday evenings at 8:30 p.m. right here on CNC3. I'm Judy Kanhai.
And I'm Anthony Wilson. This week I talked to Norm Christie, who is the president of BPTT, on the company's role in TNT's energy sector.
And we hear from one pharmacy owner who tells us why he dips into his pocket to help those who cannot afford to buy medicine. And a taxi driver tells us why she decided to join Uber.
But first, my interview with Norm Christie. Good evening, Mr. Christie. Could you give us a sense of the state of the industry at the beginning of 2017?
Well, I would consider the industry to be at a point of inflection. What we've seen is that we've had prices that have started to firm up, but they're nowhere close to where they were a couple of years ago. In fact, they're still a half of where they were if you look at crude prices, for example. So we're not in a situation where price is going to bail us out, nor should we expect it. But we've started to see the results of some of our investments in the upstream coming through. So for example, our joint venture with EOG had first gas in December of last year. And there will be more coming from that towards the end of this first quarter. So we'll see more production from our joint venture with EOG. In April, we expect to see first gas from our onshore compression project called TROP. In the third quarter, we expect to see a significant amount of incremental gas from our Juniper development, which we've talked about at length. So you can see 2017 distinctly different from, let's say, 2016, because there will be significant gas that will be coming on stream. Of course, not at the prices that we used to enjoy. But in the interim, what companies like ourselves have been doing is we've been retooling ourselves. So we've been reducing our costs, driving out waste, increasing efficiency. Commodity prices are low, not just crude prices. Ammonia prices are low, methanol prices are low, LNG prices are low. And there is a lot of hydrocarbon around the world, so several places exist where companies like BP can invest. You don't have to look very far. You have Guyana. Recently, BP made several announcements about investments. In the west coast of Africa, they had investments in Senegal, Mauritania. We extended a contract in Azerbaijan for 30-something years. Actually, it was a letter of intent, but we've done the same and similar in Abu Dhabi. And so you see all of these jurisdictions where the opportunity exists to invest. After 50-something years in Trinidad and Tobago, BP has a strong relationship with the country for good reasons. And we want to see an environment where investments persist here as well.
You mentioned the fact that Trinidad and Tobago is competing with many countries around the world for BP's investment dollars. Can you expound on that issue a little bit so viewers can get a sense of the decision-making process that goes into that?
Yeah, and let me point out that not only for BPTT's dollars, obviously, any of the multinationals or even some of the local companies would be in exactly the same place. You have a dollar and you want to put the dollar in the place where it makes most sense. So how do we decide whether a dollar is best spent in one jurisdiction versus the other is the question you're asking. There are obviously a myriad of factors, but I'll highlight some key ones. Let's start with some things that have made Trinidad and Tobago a really good place to invest. We've had sanctity of contracts. That's been a big deal for Trinidad over the multiple decades that we've been here. By and large, you do get decisions made in Trinidad and Tobago that are supportive of investments, albeit sometimes slowly. So there's an issue of pace and bureaucracy which we need to come back to, but that's important to companies because you want to ensure that when you put your dollar in, actually it's going to come back out with the returns that you expect. That then touches on some huge commercial factors like the fiscal regime. When you invest, will you actually get the returns you expect, or will it all go into taxes? Now, we love paying taxes because it means we're profitable, but it has to be balanced such that you're returning returns to your shareholders as well. Beyond fiscal arrangements, you then have several contractual arrangements you'll have with buyers of your commodity, For example, in our case, we sell our gas to the NGC and to Atlantic as two primary customers of our gas. So what price do we get? What are the terms of the contracts? Those are important factors that we have to put all together. For example, the riskiness of the country, the commercial arrangements, and then we can run our models and say, when I put that dollar in, the likelihood of me getting a return is either appropriate or not. Now, one of the things that we take into account is the appropriateness of the return relative to the risk that we're taking.
Sure.
If I take my dollar and I put it into a safe savings account, I can expect returns consistent with the safety of that investment. But if I take my dollar and I put it into something much more risky, let's say real estate or something like that, the expected return has to be higher because the risk is higher. And that's the same for multinationals investing in Trinidad or other jurisdictions. We've talked about the fact that we've actually generated over 50 billion US dollars of cash over the time that we've been here. More than half of that has gone to the country. And then we've reinvested a significant amount of the rest. We have to constantly assess whether or not our shareholders as well will get a good return.
Generally speaking, does BP get more revenue from sales to NGC or to Atlantic?
It varies over time. So when LNG prices were high, we got more from LNG. As it stands right now, ammonia and methanol prices are higher if you compare them to LNG prices. Some of the contracts that we have with NGC are fixed price contracts. So even though ammonia and methanol prices may have done well, it didn't affect our bottom line. NGC would have done better, but we didn't. But if you just look at commodity versus commodity, at one point LNG was doing better, and at another point ammonia and methanol was doing better. For that reason, what we do is ensure that we actually have a balanced portfolio, because with commodities they go through cycles and we want exposure to both.
What is the relationship with electricity generation and fixed price contracts?
So because we are one of the longest standing suppliers of gas, we actually were a part of the contracts which largely support power to the country. And that's a big part of the fixed price contract. As you know, power is subsidized, and therefore our contracts had to ensure that that could work for the country. They're lower price contracts, meaning that we make less money off them, and they're fixed. And so as we think about the future and we renegotiate our contracts, we have to think about how that works for the country and works for the company as well. We recognize the importance of power to the country, so we always say power is sacrosanct. The country will get its gas for power, but it has to be done in a way that ensures that there's always an incentive for gas suppliers to continue to supply gas.
So is the natural gas that goes to the power generators always going to be fixed price and low cost?
Well, not necessarily, because that's a subject of our next round of negotiation. What you would expect, as I mentioned, is that that tranche of gas, as we call it, will always be provided. So we don't take a chance with power getting the gas it needs. The terms for that are subject to negotiation, which are the negotiations that we're currently in. But we fully recognize the importance of power to the country, and we think long term. So we would never suggest something that would jeopardize power to the island.
What is your ideal rate of return across the portfolio in Trinidad and Tobago?
I can't give you an exact number, and that's because we look at the various portfolios and risk assess them. So as I mentioned before, I might be prepared to take a certain return with one portfolio based on its risk profile, and I'll take an entirely different return with another portfolio based on its profile. What I can tell you, though, is that we're always looking to returns that exist elsewhere. Back to this competitive conversation we were having. Trinidad has to be positioned in a place that any investor, not just BP, looks at its risk-adjusted return and goes, That's where I want to put my dollar. And fortunately, history says that Trinidad has adjusted to ensure that we invest, and that's what we're looking for in the future.
Thank you very much.
Thank you.
Up next, Judy speaks with a pharmacy owner about how foreign exchange problems affect the price of his products.